Hi, this is Tim from Trading Strategy Guides, and welcome to the webinar. I apologize that we didn't do this at our usual time, which is Wednesday yesterday at 9 a.m. Eastern Time, but I had a myriad of technical issues that I finally, hopefully, solved. So today we're going to talk about... Oh, there's another technical issue for you. So today we're going to talk about technical issues. Oh, there's another technical issue for you. Okay, I got that one solved. It's always something, right? Okay, today I'm going to show you what I consider to be one of the best doji strategies that I've seen. But first, I want to tell you that if you stick around until this short webinar is finished, I'll share my next trading maxim with you. Trading maxims. Got a bunch of them. Also, if you're watching this recording, this webinar, yes, it's being recorded. You can click the gear in the lower right-hand corner and change the speed at which you watch the video will play so you can watch it faster. Sorry, you guys that are listening live don't have that benefit, but you get to ask me questions, so that should make up for it, right? Okay, let's get started with the basics. What is a doji? The doji is a candle that closes at nearly the same price that it opened. This is what Doji candlesticks look like. This one, of course, is an example of one where the open is below the close and price went up and down and then closed above the open. This is an example of where price closed below the open, price went up and down or down and up. I mean, it could go either direction first. But the final result is that it closed lower than the open, and this is an example of a neutral candle that closed at exactly or pretty dang close to the entry price. Okay. Basically what happened here is traders just couldn't decide which way price should go, so it went nowhere. It's an indecision candle. And of course, there are various types of these indecision candles. Someone gave them a bunch of fancy names, and I'm not sure I get the dragonfly one. Maybe, I guess dragonflies have long tails. The gravestone kind of makes sense. But don't waste your time remembering the names of candles and candle patterns because, you know, I think I've been trading for 14 years and 15 years, and we rarely use these names. I mean, these are just dojis. Okay. Just always remember what these dojis are telling you. Candle wicks represent price rejection. So what happened here on this dragonfly is that the price pushed down was rejected down here and pushed back up. Price push up was rejected up here and pushed back down. So what's happened here is this tried to go short and it couldn't. So it ended up back up here. So this is a bullish signal. Always remember that the wick represents price rejection, and that'll help you remember what this is going to do. Of course, a long-legged doji just means that price whipsawed back and forth, and You'll often see those with news releases, whether it's expected news or not. Um, Price will whipsaw back and forth because of the big money trying to whip us little retail traders out of our positions. So they whipsaw prices around. Now, a lot of traders use dojis to signal reversals because it's an indecision candle and it's often found at reversal points. So I'm actually a trend trader, though, so I prefer to follow strategies that follow the trend. So I look when I find a signal like this, I look for it for an opportunity to stick with the trend. So let's combine these dojis with a 14 period moving average to create this trading strategy. It was initially designed for a daily chart, but I think you'll find that it works in the shorter time frames as well. But anytime you've got a new strategy, just don't start by trading real money with it. Test it, back test it, forward test it, run it on a demo account. Make sure that it works for you and that you're trading it properly. Okay. All right. Step one. Step one is look for a trend. And that kind of, you probably hear me say that a lot because that's the beginning of a lot of strategies, patterns, any kind of price action. Start by looking for the trend in. Okay. If it's an uptrend, in this case for long trades, we're looking for a steady move upward above the 14 period moving average. Okay, next you're going to watch for the doji candle to form near the moving average and inside the prior candle. So right here, this doji is inside this candle. It's called an inside. This is an inside candle because the low is above the low of the prior candle. The high is above the high of the prior candle. Now, sometimes some people will define an inside candle as one where the body is inside the body of the other. But either way, it indicates indecision. Big candles mean there was a lot of people that decided to go short here. They don't know what to do. They've hit this moving average and they don't know what to do. Okay. So you're going to look for a doji that forms inside the prior candle. Okay. Now you're going to look for the false breakout below the previous 2-bar pattern. So you've got this 2-bar pattern that you did here. Now you're going to look for the false breakout. Okay. Now you don't know it's a false breakout yet. So you don't have to guess whether this is a false breakout or not because you're going to wait for this candle to close. So this broke down as if it was a reversal. And then it pushed back up and closed back up above the 14 period moving average. Okay. So that's your next step. Now, in the real world, it's not always going to be this perfect. This may not push hard through the 14. It may just touch the 14. I'll show you some more examples in just a minute. I'm going to show you some examples on the live charts. But I want to show you what, the perfect setup looks like first. Okay. So once this candle breaks out and then pulls back, as soon as it gets above the open price of the doji, you want to buy it. You want to buy it. You want to take your long. Okay. Now you can put your stop below the breakout here and your first target at the top of the inside bar. Okay. Make sure that you give this some space because a lot of times it will push down. You remember, a line is never just a line. It's always a zone. So price will push below this just a little bit. So give it, 5, 6, 7, 8 pips, depending on, these are daily candles. On a daily, you may even want to give it a little bit more than that. And then put your target right at the top. The idea is that you want price to have to overcome some sort of support before it hits your stop loss, but put your target a couple of pips below the top of this candle so that it doesn't have to overcome that resistance of that daily candle right there before you take your profit. Okay. Now, these are just suggestions. You may want to test this strategy out a little bit, and you may find out that other ways of taking profit that you would want to consider. I'd recommend, in fact, that you only want to close maybe half your trade at the top of the inside bar and set the stop on the remainder of the trade to break even. So that way you can allow your trade to run. Everybody tells you to let your winners run. That's how you do it. Okay. Mark, isn't that a stop loss hunt method? Yeah, it is. Anytime you have a stop loss or you have a stop loss in a logical place, it's going to be hunted. But that's one of the reasons why you probably want to trade when there's a lot of volume being traded during the New York session or the London session, because it's a lot harder for the brokers and the big money to push price around. But there's almost nothing you can do about it unless you may have a strategy for that, for handling that. And if you do, I'd be glad for you to share it. But I've also used the ATR 1.5 times the average true range as a stop loss as well. But just about anything that you can do can probably be logically figured out. So yeah, you're absolutely right. That's a stop loss hunt spot. But there's almost nothing else that you can do, unless you want to move to a really crazy stop loss. Okay. Let me switch over now to live charts, and let me try to switch over to live charts. There we go. And show you some real world examples. These, I picked these out just pretty quickly. It is, once you get used to finding them, they are sort of easy to find. Let me start on a different one. Let's start on pound New Zealand. This was on a daily. Okay, this is kind of a nice one right here. Here's the inside doji, and here's the original bar. And you could go long on this candle, short, or sell on this candle right here at this point. Your stop would be 80, 85-ish pips. Your initial target would be 180, 190, 200 pips right there. And if you let the rest of it run, you could potentially get another 400 or 500 pips out of it. It's likely that I would have closed this as soon as this closed above this prior candle. So I might have gotten 430, 440 on the second half there. So. Oh, Mark, I understand, buddy. I understand. Um, yeah, sometimes you just have to take your licks and keep on ticking. You know what I mean? Um, Sometimes there just is no alternative. Um, you win a few and you lose a few. That's kind of the way it works out. But anyway, this one would have worked out really nice. This is last November on the pound New Zealand. The euro dollar. I think this is a 15-minute. Yeah. Okay, this one is not as pretty. This doji right here formed. The body is inside this candle. But the actual head fake started on this doji. So this one is not as pretty. But as you can see, if you still took this when this candle pulled down to the beginning of or to the open of the doji, um, you're looking at and this is a 15-minute chart. You're looking at maybe an 8 or 10 pip, and I wouldn't use less than a 10 pip stop loss. Okay, that's kind of craziness. I have used less, but um, I don't like the idea of doing that. But so a 10 pip stop loss, and you could probably target right here, which is also, well, just shy of that, 9 pips right here. But see, you've got a really nice 40 pip move down here on the 15-minute chart. So like I say, they're not all going to look pretty, but we've got the doji, and it's the body is inside. And then we've got the head fake here. So let's take a look at the CAD yen. Yeah, Mark, I think of dojis as continuation candles sometimes. Um, Actually, that happens quite a bit. Price will move 3 or 4 bars, and then it's got to breathe. And what comes out, a doji. Sometimes you get a pullback, sometimes you don't. Sometimes it just goes sideways for a couple of bars, and you get a couple of 2 or 3 dojis, and then price continues on. The idea is that they don't always work, but that's okay because nothing always works. And what you do is you protect your trades in such a way that you take your stop loss when the trade is not working anymore. And sometimes you'll get out too early and price will go your way. That's just the way it is sometimes. And sometimes it will. Uh, if you try to stay in it, sometimes it'll go the wrong way, and that's even worse. So let's see. This CAD yen is an hourly, I believe. Yeah. Yeah. Okay. So here's another one that's a little bit different. The price had turned up here, but the 14 period moving average hadn't really caught up yet. But I feel really good about this. And, it's easy to feel good about it when you can see what's coming after it. So I envision this as while it's happening. When I look at these, this was an inside candle. The body is inside again. Um, I don't know. This one is probably, I probably would have walked away from this one because this is a lot of price rejection down this way. But price was rejected to the upside as well. So one thing I do like to do is I like to add the volume. I know that the volume is not real volume like other, um, like futures or whatever. But it does give me some idea of how many traders are involved in this. Okay. So this was above average volume on these two candles. Um, so a lot of volume behind this move down and this move back up. So I probably would have stayed away from this one. These are just ones that I just quickly found to show you guys. This one is definitely a failure. Okay. And I picked this one because I'm not going to just show you the cherry pick winners. If you're going to be a successful trader, you have to understand that not all of them work. Not all the triggers win. So, and some will lose through no fault of your own. I did not understand that when I began trading. Okay. So it would have been nice if someone told me that. So that's the reason why I share this every time I talk about it, because it derailed my progress for a few months until I figured out that I wasn't picking the wrong trades when it lost. I thought, well, I'm picking a bad trade here. I was picking it exactly the way it should be picked. But this doesn't work sometimes. Okay. So this is, here's a doji that happened inside this candle right here. Okay. And it was in a downtrend. So had we entered when this pushed up and pushed back down to this point, sorry guys. Had this pushed down to, hang on. Had we entered this short right here, we would have gotten stopped out right on this candle right here. So that would have been up 4 or 5 pips. I guess I would have had at least a 10 pip, 8 or 10 pip stop on this. So I guess we probably would have gotten stopped out up in here somewhere. Okay. So that's an example of one that just absolutely did not work out. Okay. Sergio, camera focus. I don't know what you're trying to tell me. Having trouble seeing the video or something? Okay. Questions? Anybody else have any questions? Anything I can help you with? If anybody has any questions that's watching this video, just put them in the chat below. I will try to get back with you within a couple of days at the most. I try to stay on top of it. Not always, but just remember, always protect your account. If the trade's not doing what it's supposed to do, shut her down. Well, I probably can't answer what's the meaning of life kind of questions, but any kind of questions on trading, I'll be glad to answer them. I might even be able to handle questions on fitness. Oh, sure, Mark. Just remember that the volume that you're looking at is only the tick volume. In other words, it just shows you the number of trades that took place. It does not tell you if those trades were 100 lots or a tenth of a lot. Okay. You don't know that. So the actual volume that's being traded, You don't really know, but you at least know how many trades are being fired off on those candles. So that's helpful. Now, if you trade at uh, the futures or stocks, those are actual trade volumes, and those are more useful, I think. Yes, Sergio, absolutely. Yeah, candlesticks. The shape of them, the bigger the wicks, the less, the more indecision that took place. Um, Big wicks equals price rejection. So anytime you see a lot of wicks, you know that price was rejected in that direction. So you can typically think that price may go back in the other direction. Oh, John, I wish I could help you with that, but the truth is I don't trade stocks very often, and um, and I don't really look at fundamentals at all. So I really can't help you with that. Uh, Talk about the energy sectors. Mark, I try to do this webinar Wednesday mornings at 9 a.m. New York time. I failed this week, but I also post a couple of analysis videos, one on Monday and one on Friday, um, about whatever trading instrument jumps out and grabs me that particular week. Okay, anybody else? Okay, well, if you have any more questions, just fire them at me. I'm going to move on to this. Um, as promised early on, we're going to talk about my trading maxim. Now, I have, I think, 35, 36 trading maxims now. I keep adding to them. Um, so, um, so let's take a look at today's number 8. Number 10. Wow, somehow I missed out. Don't worry if you left money on the table. It's not worth the ulcers. I'm serious about this. Don't get what we call the FOMO syndrome, the fear of missing out. There'll always be another trade. If you closed your trade with profit, then you're great. Who cares if you left twice as much money on the table? It's no big deal. You got profit, you're good. If you closed your trade at a loss and it went back in your direction, well, stuff happens. You know what I mean? So, I hate to be hard nosed about it, but there'll always be another trade. And if you've left money on the table, it's done. It's over with. Move on. Forget about it. There's nothing you can do about it. And if you worry about it too much, you're just going to do something stupid. And I don't think you want to do this. John, do I show my charts during these live sessions? Sometimes. It's not really about what I'm actually trading or whatever. I trade primarily from the daily charts. Once in a while, I get wound up, and I come in here and I trade the day trade for the New York session, but usually Forex. Sometimes I trade futures, but I primarily do Forex when I do that sort of thing. And if I've got something on that seems like it would be appropriate, I don't mind showing it. So, okay, in case anybody cares, this image was shot at Bald Rock near Greenville, South Carolina, in the foothills of the Appalachian Mountains. So I used to live there. I now live in Texas because my kids moved to Texas. But these were some of my favorite places to hang out. Sergio, I trade options sometimes, stock, actually bond options sometimes. It depends on your strategy. It depends on what you want to do. Forex moves faster than anything. So there's more activity throughout the day on Forex. So that's why I like Forex. But you also have to keep in mind too that um, that Forex is maybe a little less regulated than some of the other things. I definitely would not trade binary options, for, currency binary options. I think they'll come into their own in due time, but right now I don't think that's safe. I do trade some cryptocurrencies as well once in a while, but usually just day trade those. John, percent stop loss. What I typically use for my stop loss is 1.5 times the average true range on whatever chart that I'm taking a signal on. So let me drop back here and show you a chart and show you what I mean. Okay. Well, I'm not sure what happened to my ATR. Oh, there it is. Okay, so if let's say I was going to take this trade right here. Okay, at that moment, um, the average true range on this particular chart was 7 pips. You see this 7 pips right over here? Okay. So I would have used 1.5 times 7, which is a little over 10. So I probably would have used 11 or 12 pips as my stop loss on that. My initial target would have been 1 times the ATR, so 7 pips for my initial target. And then I would take about half off at the initial target and let the rest of it run uh, with a trailing stop of some kind behind it. Okay. Um, my risk is never more than 2% of my account balance. It depends on the broker too. I'm in the U.S., so um, the brokers are really limited on leverage here. So I can really only trade about 0.5% risk on forex trades in my Owanda account, but I have some foreign accounts with higher leverage that allow me to trade a little bit higher risk. The reason, of course, is that if I use more than 0.5% risk, then my trade sizes are too big and I end up running out of margin. So I end up not being able to take more than 2 or 3 positions at a time. So, and when I'm day trading, I usually take more than that. So, Mark, I would love to see England. I've never been there. I would love to see Scotland. I would love to see Ireland. Um, I have friends over there. Well, I've been doing trading rooms for 10 years. Um, so I have lots of friends all over the world. I have some friends in southern England, or little London, and some in northern England, and probably even a few in Scotland. And I would really love to come visit there. That's my bucket list. I also have friends in Australia and New Zealand, and I want to go there. Sergio, yes, the trading view charts are awesome. I As I mentioned, Owanda is one of my brokers, and by the way, I'm very happy with Owanda. I'm not happy with the U.S. rules, but I am happy with Owanda, and I can trade my Owanda account live right here on this TradingView platform. So that's really nice. I also use MetaTrader for for various and sundry things too. But most of my futures trading is done on TradingView as well. So I'm really happy. I have the pro version of TradingView too. It's worth it. It's not very expensive. Sergio, on this, in this case, this is the euro expressed as Swiss francs. So this is 1.1283 Swiss francs per euro. Oh, you're welcome, John. John, another reason why one of the reasons why I always answer those two questions you asked is because that was something else that annoyed me when I started. Was I would ask the trainer, what, how much should I risk? How much stop loss? And his answer was always, well, you have to decide how much you are willing to. That's a bunch of hogwash. I'll tell you what I do. You can then decide whether that works for you or not. Okay. So it always annoyed me when they danced around my, what I'm asking, what stop loss should I use? What I was asking is, what do you consider a reasonable stop loss? And that's the reason why I say I wouldn't use less than 10 pip stop loss, because you're just going to lose money doing that. So so that's one answer. And then of course, if I'm trading on the daily charts, then now we're talking about a lot larger stops. Now we're talking about 100 pip stops and so on. But again, I use 1.5 times the ATR. Here the ATR is 45 pips on the Euro Swiss, which is not a really huge mover. The pound New Zealand is a huge mover. And we're talking about 191 pips on the pound New Zealand. So, but because this whips around, you have to trade smaller size, but you can make more pips. But you don't want to risk more than 2% of your trade. I mean, of your account on any one trade, and that way, that's how you protect your account. Because if you don't have an account, if you don't protect your account, you're going to end up with no money to trade. You blow out your account, then what do you got to do? You got to put more money in there, and if you don't have more money to put in there, then you're going to be trading on demo until you can put together enough money. So. Sergio, I don't. What do you mean by I don't have a dollar sign? I mean on the prices up here. That's because the prices are not actually dollars. They're actually, in this case, it's the pound in terms of the New Zealand dollar. So it's $1.86 New Zealand dollars for every pound, and so on. Oh, oh, no, that's not necessary, Sergio. Just just click the thumbs up button below the video, and also subscribe and hit the bell. And other than that, it's freebie. Oh, futures and ETFs, awesome. I like trading futures. I really do. And the only thing that bugs me is that you can't really trade them all day long. But yeah, I've traded a lot of index futures primarily. But okay, so like I say, if you enjoyed this, help us out by clicking on the thumbs up below, and then click on the subscribe button and hit the bell. Oh yeah, I guess they are 24 hours now. When I traded them a lot, they weren't, and that's the reason why I switched to Forex, but that was a long time ago. So I'm really, really a Forex guy primarily. And once in a while I go over and I trade the index futures and stuff. Thanks, Sergio. Oh, see you, Mark. All right. Okay, you guys, have a good day. I'll catch you next time.